Folks, the market is experiencing unprecedented volatility right now, and there's both a lot of risk in the market and a lot of opportunity in the market. And while this is uncomfortable, I do have a solution for you guys on how to navigate the market. I'll make this a short and very important video. Let's start off with the logic in the situation going on in the market, and then I'll give you some facts and opinions of my own. Let's start off with the facts, okay? The sell-off is 99% an overreaction. There are definitely things that are concerning in the market, but such a huge pullback is definitely an opportunity. And Tom Lee explained it very perfectly. And I have a lot of data to support why the market is overreacting and what you can do about it. Let's start off with a quick 25-second clip, and then I'll explain in more detail.
Great to see you.
Why do you say overreaction?
Well, yesterday really was an indiscriminate selling day. Did Tesla's valuation and fundamentals drop 15%? Did the broad market have a 4% decline in valuations? To us, it really looked like a lot of liquidation. I think investors are, of course, reacting to the White House warning of pain ahead, but it has been more of an equity sell-off than it has been in corporate bonds. So to us, 4% down days, yeah, I think it's an overreaction.
All right, so Tesla pulled back 15%. And something that I want to say right now is that my portfolio, I'm being 100% transparent, year to date is down 8.57%, as you can see on the screen right now. It's currently sitting at 3.8 million. However, I want to point out that Tesla, okay, year to date, if you take a look at year to date performance on Tesla, it's down 39%. Remember, I had a lot of Tesla shares, but on February 24th, you can see here, I made a video saying, warning, 2025 stock market crash has begun. I got 92% likes here, which means that a lot of people were upset at me talking about the truth. When we look at what actually happened on February 24th, selling Tesla, selling a lot of the stocks that I had that were a bit more risky, protecting and using covered calls and the strategies that I discussed in my videos has been incredibly beneficial for having less of a pullback in the market. Now, with that being said, I don't want to rub salt in the wounds. I understand things are very painful for me. The portfolio has also gone down, and I want to discuss why things are so volatile right now and what we can do going into the future. Because I understand in the moment when I make some videos, not everyone wants to or can take action emotionally. But I want to settle things down, relax the situation, because all the stuff that has happened in the market, although very difficult, I think there's a lot of opportunity right now. So first of all, I want to discuss why this happened. So I think this is the White House's fault. There's tariffs going on Canada. There's a lot of geopolitical concerns like the Ukraine and Russia conflict, and this has contributed to market volatility. Look, the White House appears to be signaling that market fluctuations are not their primary concern, and they're focusing on broader economic policies, which I kind of think the White House right now is putting investors in the stock market, a little bit later on in their level of importance. They want to handle broader economic issues first, which honestly, I kind of respect, because long term, this is going to help me and you, not hurt us. It's going to help us if they can clean a lot of things up, get some wars finished, right? And get the economy more productive and more innovation and more capital flowing into everyday people, small businesses, the consumer. Right now, the consumer is weak because there's so much uncertainty in the market. Now, look, since I made this video on February 24th, basically saying game over, and again, the next day I said again, game over. Since this point, February 24th, QQQ, which I also really like to look at because QQQ has a bunch of holdings like NVIDIA and Tesla. On February 24th, we were right here at 519. So we've had a dip 9% or a little bit over 9% since I've made that warning video. Now for Tesla, it has been a lot more drastic, with Tesla stock actually coming down on February 24th. I mean, this stock was over $330 per share. Huge. Now it's down $100 from that point, down 30%. And I actually ended up saving money by getting out of Tesla in the high 290s by doing a covered call option. This is why joining my Discord community is so beneficial, because I can't always update live on YouTube and give plays that I'm making, because a lot of these trades that I'm making is during my live calls on the Discord community, and I have to put my students first. So I will be shifting a lot of my attention from making so much YouTube content to focusing more on the Discord community, because in these volatile times, I want to support my community of students. I think the proof's really in the pudding that although my results are shaky, and I do have a lot more things to talk about in this video, I do want to point out that it has been incredibly helpful to hedge, to protect, and as hard as it is, reducing some of the big positions that myself and my community has had on some of these high growth stocks, and putting in more of a mix into more value stocks, hedging positions, and actually have a really very important example that I'm going to cover in just 2 minutes from now. But I first want to kind of relax you and tell you the general plan before I tell you the specific option trading strategies, okay? The general plan is this. There's nothing that we can do about the market going down. We're all affected. Myself, my students, you, even if you're not a student, we're all affected. And what we have to realize is that dollar cost averaging is still the best strategy. The stock market is a proven wealth building machine. The market does look like it's overreacting based on what Tom Lee said, but you don't have to look at Tom Lee or anyone else. Just take it from me. I have a degree in this stuff. Markets fluctuate, corrections happen, bear markets happen, and crashes 2000 and 2008 happen. It doesn't really mean that much in the long term. It only affects short term. And yes, it's very difficult if you're looking to retire and you're close to retirement. But again, we have to, weather some of the bad times if we want to, be part of the good times. And if we zoom out, my portfolio has certainly done fantastically well. My students' portfolio have done fantastically well, as long as you put in the time frame, okay? The time frame, the more time there is, the better the results. I would say in this market, you have to dollar cost average. You have to do covered calls. Right now, because the market sold off so much, Tesla looks incredibly like a good value. And Tesla's fantastic. Nvidia, I think, at $100 is fantastic. And there's so many more stocks that, I will be covering on YouTube with potential delays as I upload videos. But there's so many fantastic opportunities, and it's a really good market for stock pickers specifically. Right now, you must be using options. It's a requirement to outperform the market. The only way to outperform, and how I've outperformed, was hedging, using option strategies, buying puts, call credit spreads. I'm going to show you a call credit spread example, a real example that I actually placed. And that's actually how I've had decent performance years to date. I'm down, but I'm not down that much. And when the market recovers, which it will, it's not if, it's when it will recover. And when it recovers, it's going to be a really easy time again to make a ton of money. So you have to be positioned well for that. Many stocks are becoming very cheap, and I'm going to be buying many this month in my Discord community. Now, look, I want to cover a brief strategy. This is a hedging strategy. I actually opened up this strategy. I hope that you're ready. You have to kind of pay attention for 2 minutes. This was a clip from an actual trade that I made 2 weeks ago, and it helped me save a lot of money. It's a 2-minute example, and I apologize ahead of time for my camera not focusing, but the example was absolutely brilliant, and you have to use this example on your stock holdings to hedge and protect yourself, because it can make you 5 or 10% in the next 30 days in March and going into April. I want to go through my portfolio because Apple is something that's not sexy. I know you're going to click off the video and it's not interesting to most people. However, I want to go into my Apple position and completely change your mindset around value stocks and having a mixture of not just growth stocks, but actually having value. I have 1.4 mil in Apple. I'm up $333,000. And over the past 1 month, Apple has had a 9.5% return. This is my top holding at 36% of my portfolio. And this is how my Discord community has been the #1 Discord community in the past, so long of a time actually. But this month especially, because we have Apple. And Apple, I want to show you a play. It's called a call credit spread. And I want to quickly educate you on what a call credit spread is and how you can use it to make money. This is going to be really interesting because I am bullish on Apple. However, Apple itself has gone up a lot. So I'm looking to hedge and create income. I'm going to click trade. Trade options, and I'm gonna go to Apple April 17th, okay? And I was, taking a look at the technical analysis, but I'm trying to make this video short as possible. I know nobody likes long videos, so let me go and do the 270. This is easy money. This is as easy money as it gets, okay? Hold a lot of Apple or whatever stock, right? I hold a lot of Apple. In my community, we always talk about Apple during my live Monday and Wednesday calls. And not only are we long a stock, we generate income by doing call credit spreads, which is, you can also do the strategy without holding the stock, but I recommend holding the stock as well. So look, sell call, I'm gonna sell the 270. I'm gonna just expand this option right here. You'll see it's a 15 delta, super low, super low. So I'm gonna sell the 270. Okay, I'm gonna go click buy the 275. And you can see here, it's a total credit of $52. My max loss is 448. Now, it's unlikely Apple will go to 275. You would lose money here if Apple went to 275 in the short term. Unlikely, but it's possible. So again, pay attention to risk management. Don't open up more than 2 to 3% of your money in any single call credit spread position. But here, no brainer play. $52. This is like a bit over 10% return. 10% return in 60 days. All right, I hope that clip was really helpful for you. So I used the call credit spread on Apple. You can use call credit spreads on any stocks that you hold right now. It can be a great opportunity on Tesla, it can be great on Nvidia, it can be great on Palantir. A call credit spread basically is the best strategy that you can use to create income. If the stock goes sideways or down, you will generate a lot of income and you'll be very happy that you opened up a call credit spread. A call credit spread is a bearish strategy and it outperforms the market, or it actually produces income and helps you outperform the market when the market is in a bearish move. Remember, you can make money in bear markets, you can make money in corrections, and oftentimes options traders, they perform extremely well in bear markets because options can make money when the stock market goes down. It's very simple. You buy put options, call credit spreads, or simply hedge your holdings and lose a lot less money. So although I had a lot of exposure, I don't have much exposure into Tesla anymore. I sold, and my Discord community knows that. We've done covered calls and a lot of us have gotten out. We've gotten out a lot of the positions of Tesla. We have saved a tremendous amount of money by using the strategies that I've covered in this video. And if you want to know more option strategies that can help you hedge and protect your portfolio or make money when the recovery happens, because the recovery will happen, then check out some more videos on my playlist here for option strategies. And I'll keep making as many updates as possible, but you may see me do a little bit less content as I am focused on my community at this time and supporting all the members there. So I might not be posting as often, but I hope that you still found value in this video. If you wish to subscribe, I will keep making as much content and helping you as much as I possibly can. Thanks so much, and I'll see you in the next one.